Welcome to the Authority Hub podcast. I'm Nolan, joined as always by Claire.
And today we're featuring the expertise of Lucia Gugliuzzi, mortgage broker in Vaughan-Woodbridge, Ontario.
If your bank just said no to your mortgage application and you've got an accepted offer on a home in Woodbridge, what do you actually do next? And how much time do you have before that deal falls apart?
That's the exact situation that brings people to Lucia Gugliuzzi, and it's more common in Vaughan-Woodbridge right now than most people realize.
Let's set the scene. A self-employed contractor, good income, solid business, 5 years running, walks into his bank to apply for a mortgage on a home in Woodbridge.
And the bank looks at his tax returns, sees 2 years of reported net income that's been reduced by legitimate business deductions, and the number doesn't clear their threshold.
So he gets a decline. And his first thought is that he's done, that the mortgage market has just closed the door on him.
That's where the misunderstanding starts, and it's one Lucia Gugliuzzi deals with constantly in her work across Vaughan-Woodbridge, Kleinburg, Maple, and Concord.
Because a decline from a bank is not a verdict on the borrower. It's a verdict on whether that borrower fits that particular lender's criteria.
And the criteria at an A lender, your major banks and monolines, are built around a very specific income documentation format that self-employed borrowers often can't satisfy, even when the income is real and the business is healthy.
That's the system failure here. The standard channel is not broken, it's just designed for a specific borrower profile.
Right. 2 years of tax returns, 2-year average of reported net income, that's the A lender template. And when a borrower has legitimately reduced their taxable income through business deductions, that reported number may not reflect their actual financial capacity at all.
So the system isn't calling the borrower risk. It's saying the documentation doesn't fit the box.
And that distinction matters enormously, because it determines what the next step actually is.
This is where Lucia Gugliuzzi's expertise in alternative financing becomes the thing that changes the outcome.
The alternative mortgage market in Canada is larger and more structured than most borrowers ever realize. The Canadian Lenders Association reports approximately 300 active alternative lenders responsible for between $13 and $14 billion in outstanding mortgages.
That's not a gray area. That's a regulated, functioning part of the mortgage market that exists specifically because not every borrower fits the standard template.
And within that market, Lucia Gugliuzzi's work in residential mortgage broker, purchase, refinance and alternative financing is about knowing which of those lenders fits which file.
So let's walk through what that actually looks like. For a self-employed borrower, the alternative channel, specifically B lenders, often has stated income or business for self programs that assess income differently.
They still need to see that the income is real and ongoing. It's not that the documentation disappears, it's that the format and the calculation method are different from what an A lender requires.
And for that contractor in Woodbridge, that difference is the difference between a decline and an approval.
Lucia Gugliuzzi's role in that process is not just placing the file. It's matching the complexity of the situation to the right lender before the application is submitted.
Which matters more than people realize, because every formal application triggers a hard credit pull. If you're submitting to the wrong lender, you're wasting time and costing yourself credit score points.
A broker who knows the actual underwriting criteria across A, B, and private lenders can pre-screen the file and identify the most likely path before anything is formally submitted.
That's a specific skill. It's not just access to lenders, it's knowing what each lender will actually do with a given file.
And in the alternative channel, the documentation requirements are often more detailed, not less. A self-employed borrower might need 2 years of business financials, personal tax returns, several months of business bank statements, and a clear explanation of the business structure.
So the file has to tell the full story, not just the parts that look clean.
Lucia Gugliuzzi describes this as translation work. The borrower understands their own income perfectly. The broker's job is to present it in the language the lender needs to see.
And that translation, making sure the file tells the right story clearly, is often what makes the difference between an approval and a decline on a file that could have gone either way.
Now, self-employment is one profile, but the alternative channel serves a wider range of situations than that.
Borrowers recovering from a credit event, a consumer proposal, a period of missed payments, or another common profile in Lucia Gugliuzzi's work across Vaughan-Woodbridge.
And the key thing there is that lenders in the alternative channel look at trajectory, not just history. A single missed payment from 3 years ago reads very differently than a pattern of late payments over the past 12 months.
So a written explanation of what happened, paired with documented evidence of recovery, can meaningfully change how a lender reads the file.
New to Canada borrowers are another group. Sometimes the issue isn't income or credit history, it's that a Canadian credit profile simply hasn't been established yet. And there are lenders with programs specifically designed for that situation.
And then there are property-related issues, unusual construction, mixed-use zoning, rural locations, where the borrower's financial profile is strong but the property itself creates complexity for lenders.
In all of these cases, the alternative channel is not a last resort. It's the right channel for that specific situation.
Let's talk about the cost structure, because this is where a lot of misconceptions live.
Yes, alternative financing does cost more than a conventional mortgage. The rate is higher, there are typically lender fees, and in some cases broker fees. That's real and it should be disclosed clearly before the application is submitted.
And under FSRA, the Financial Services Regulatory Authority of Ontario, it has to be. Mortgage brokers in Ontario are regulated, and full disclosure of all fees and compensation is required.
So the question isn't whether it costs more. It does. The question is whether the access it provides is worth the cost given the borrower's situation and timeline.
And for most borrowers using the alternative channel, the answer is yes, because the alternative is not a cheaper mortgage. The alternative is no mortgage.
The other piece that matters is the exit strategy. For most borrowers, alternative financing is a bridge, a 1 or 2 year term designed to stabilize the file and move toward conventional lending at renewal.
That's built into the plan from the beginning. It's not an afterthought.
A borrower who goes into a B lender term knowing the goal is to return to the A channel in 2 years is in a completely different position than one who doesn't understand what they've signed up for.
And that clarity, understanding the full picture before you apply, including costs, timelines, and exit strategies, is exactly what Lucia Gugliuzzi's approach in Vaughan-Woodbridge is built around.
There's a renewal dimension to this conversation that's worth spending a moment on, because it's affecting a lot of borrowers in this market right now.
The Bank of Canada has estimated that roughly 40% of outstanding mortgages could face higher payments at renewal, and for borrowers whose financial picture has changed since the original mortgage was written, renewal through the same lender is not always automatic.
If you switch lenders at renewal, the federal stress test applies. Which means a borrower who qualified comfortably at origination may face a tighter qualifying calculation today if their income or debt profile has shifted.
And CMHC data shows that 90-plus day mortgage delinquency rates increased in 2025, with the increase concentrated in Ontario. That's the scale of payment pressure in this market.
For borrowers who can't qualify through the A channel at renewal, AB lender renewal can provide a structured path forward. The cost is higher and the term is shorter, but the goal is to use that period to stabilize the file and return to conventional lending at the next renewal.
That's not a failure. That's a deliberate and practical response to a real situation, and it's the kind of option that Lucia Gugliuzzi helps borrowers across Vaughan-Woodbridge identify before the existing term expires.
Because addressing a renewal situation proactively, before the term is up, gives the borrower more options and more time to find the right solution.
Back to our contractor in Woodbridge. He comes to Lucia Gugliuzzi after the bank decline. The file gets reviewed, income documentation, business financials, credit profile, the property.
The file goes to AB lender with a stated income program for self-employed borrowers. The income is real, the business history is there, and the documentation tells the full story.
He gets the approval. He closes on the home. And the plan from day one is a 2-year term, rebuild the credit profile, and move to conventional financing at renewal.
The number that looked like a barrier stops being a barrier, because the right lender was matched to the actual file.
That's what this work is. Not finding a workaround, finding the right path for the actual situation.
If you're navigating a complicated file in Vaughan-Woodbridge, whether it's a purchase, a refinance, or renewal, the starting point is a conversation, not an application. You can find Lucia Gugliuzzi at luciamortgage.ca.
Lucia Gugliuzzi is a mortgage broker in Vaughan-Woodbridge, Ontario, specializing in residential mortgage broker, purchase, refinance and alternative financing.